welcome so much to the first episode of our InvestOps 2026 podcast. I'm Megan Smith. I host kind of all our podcast, all our content stuff. We're going to be unpacking the research that we've had from this year's report. And we do this every year. We work with SimCorp and we just want to kind of get a feel for where the industry is at the moment. So I'm very thrilled to be joined by you both. And I think it'd be really exciting if you could both introduce yourself before we kick off the conversation. I'll start with you, Alun, if you'd like.
Okay, my name's Alun Cutler. I work for SimCorp here in lovely London. And effectively, I head the commercial development team. So we look at all things in terms of how our product is seen by the market, how we present ourselves to the market. So hence the reason I'm on the call today.
Amazing. And Roland?
Yes, good to be with you here today. Roland Waz, joining you from New York today. I lead the investment management consulting practice at Deloitte. Spent the better part of 25 years doing operations and technology transformation for asset managers, asset owners, and the like.
Amazing. So I imagine you're both kept very busy then.
Yeah.
Perfect. Well, I think it's kind of very exciting to start this conversation up with the kind of topic of innovation. It's kind of always a big framework for the report that we work on with InvestOps. And we always like to kind of start by getting a feel for where everyone is in the industry in terms of their kind of strategic priorities. We always ask the same question. And this year, we've actually seen a bit of a shift. So 2 years ago, for the kind of past 2 years, I should say, we've seen a focus on operational efficiency, but 55% of firms now prioritize competitive differentiation through innovation. What's driving this pivot?
Effectively, you can only drive efficiency so far before you really have to start looking at other levers to push. You can only try cost cutting in a certain way. We know fee compression's still on the drive. People are still trying to drive these things low. We know assets aren't growing the same way they were, so you can't take the fees out of the asset side of it. So it really is about, right, so we've done a lot on the efficiency side. We've done a lot trying to drive that side of it. What can we do next? So we're now seeing that, and with the arrival of AI, of course, on the cusp at the same time, in terms of really starting to deliver meaningful answers, not just ideas. I think we've seen this shift to suddenly going, let's start really pushing hard in that area there, really trying to drive the agenda forward.
Roland, have you got any kind of thoughts on that?
In essence, if you think about the focus on simplification or operational efficiency was actually a needed precursor for innovation, because clients had fragmented landscapes, and even if they wanted to innovate on products, bring in new asset classes, etc., they actually couldn't without significant manual workload and headcount increases. So I almost look at it as the next chapter. You innovate from an operational efficiency perspective. You get to standardize front to back ecosystems. That's allowing clients now to think about what are some of the new products we need to bring to the market. How do we differentiate from an investment strategy and investment outcome perspective that presumably was not possible a few years ago with a fragmented landscape? So I think that's the biggest driver. And, it's really exciting time because we've never seen more innovation in terms of, the convergence of whether it's wealth and asset management or public markets and private markets coming together. So it's a really exciting chapter to look forward to in the coming years.
Absolutely. I guess we, as part of the report, we're fortunate enough to try and get commentary from a wide range of people that work in the industry, just to kind of get their thoughts on the data. And kind of a couple of quotes that we got there. I think one of them said, one of our brilliant contributors said, the pace of innovation is kind of reshaping the priorities that we have. And one other person, I think we said, kind of innovation without innovation without the right safeguarding creates new vulnerabilities. Is this something that you guys find, that there's any that there's new vulnerabilities or challenges that just wouldn't have been around pre kind of this new technology coming in, kind of your AIs and all that jazz?
Yeah, 100%. We've seen the conversations have moved very rapidly into that kind of space in terms of effectively, okay, so you're bringing in AI, you're opening up to it. How are you protecting the data? How are we sure that it's secure? How are you making sure those vulnerabilities are not exposed wider? How do you ensure that you meet all the new regulatory stuff that's coming forward at the same time? I mean, yeah, as Roland was saying, that collapse of trying to get everything onto one platform, driving the data, that's a piece of that whole model. But then as you say, it's like, what are we going to do in this next stage? How is that going to change behavior? And I think we've seen the levels of the conversation, the depths of the conversations massively incrementing in a very short space of time as people get, I guess, familiar with what they can do, comfortable with what they can do, and then the realization of what the knock-on effect is.
Definitely. I guess to bring it back to the data as well, it kind of shows that there are distinct innovation priorities. I think 56% focus on portfolio management and trading innovation, 50% on the strengthening the risk management. Why do you think these risk areas are so specific? Roland, I'll kind of jump to
Well,
you.
so I mean, I would say like the definition of risk management is also evolving as we go through this innovation period. So you're pivoting from classic market risk that clients looked at to really having to think about model risk. If you think from an AI perspective, you mentioned you could look at cyber deepfakes. All of those considerations from an AI standpoint become really important. But you also have to look at liquidity risk as you think about private markets, percentage of private assets increasing in portfolios, whether that's asset owners that need to think about, asset liability matching, or asset managers that are looking to provide private assets to, let's call it wealth participants or, kind of broader retail. That brings new considerations from a risk management perspective and forces the risk management discipline to become much more broad than historic. And that's why we're seeing investment in that space.
Yeah,
I
absolutely.
don't know if that resonates with you.
Yeah, it's whenever you want to expand in the front office and you want to create new ideas, new models, new processes, you have to look at the risk element of it. I mean, the industry, yeah, there's been some instances in the past, 2008, where people went certain directions without the right levels of risk controls, we could say. And if it does go wrong, it goes wrong in a big way. So this is a big change. We have to have a risk keeping pace with front office innovation, front office drive. I think the shift towards, in some respects, the front office in this area is these new data models, the speed of analysis that you can achieve, the things that fund managers can now achieve far outweighs what we could have done in the past, and the speed of involvement there. And if you think about that kind of the model of reducing costs, increasing revenue, yeah, if you can increase your profits, you increase your margins on the front office side, you can increase your revenues. That's also that drive towards private markets, trying to drive that revenue as people are diversifying into new areas that have more returns based, so they can increase their revenue take on the other side of it. Because fees are going down one side, you've got to try and lever up on the other side at the same time. And I think it's that combination of, new opportunities, therefore new risk controls to rein in some of that to make sure it's safe, while at the end of the time trying to drive that revenue market up at the same point.
100%. I mean, that fits really well with kind of the data anyway, that 64% are prioritizing adaptive risk and analytics. Yeah. It's kind of really just reflecting that kind of changing market condition. I guess you touched on it briefly, but it is everyone's favorite topic to discuss AI, and everyone wants to talk about it in however much capacities. But it kind of the data again is kind of quite fitting that 70% of firms now use AI in production, 53% in scaling implementation. I always find this when I'm on site and chatting to kind of people at events, and their decisions and conversations about AI have kind of evolved and changed from kind of this wonderful fantasy idea to now kind of being quite concrete. Have you found that these conversations are shifting even across the last year? I see a nod from Alun, so I'm going to go to Alun.
No. I was nodding to allow Roland to dive in. Yeah, 100%. I mean, we've been showing AI different use cases, simple ideas to begin with over the past couple of years. But the expansion recently is not just a case of what are we doing, it's how the companies themselves and what they build can be attached into it. It's how the third parties are adapting to it as well, and how we can work with those third parties, that wider ecosystem Roland mentioned earlier about bringing those tools together, because there's so much data you don't want to have to keep mapping across platforms now. Agent to agent communication opens up a whole new direction in that side of things. So we've seen a huge uplift in the impacts it can have and people's realizations of those in terms of what it can mean to their workflows, even to the point where we've shown people going, you can literally just chat with the AI engine to build your whole front end, which democratizes the whole user experience in a moment. And because previously, people are going, I don't know how to design or add columns, and you don't need to. Something else can do that for you. To the point of going, what are the analytics you're capturing? What's the history you've got? What can I start to drive, research and calculations onto documents? It goes in all directions. It's exciting, and also there's so many ideas right now. It really is a busy period.
Yeah, I completely agree. It's really it's an interesting time because there's nothing you can't do, but that in itself is a challenge in terms of determining where you actually place your bets. So if you think about the journey with AI, all our clients were early adopters. Everybody stood up, tons of POCs, automated a lot of use cases, experimented with agents in various, whether they're custom built in-house or they're delivered through partners and platform providers. And I think we're reaching a point where to truly unlock operational efficiency and value, an agent needs to really kind of reflect a persona. And for investment managers or asset owners, like that's important because usually a particular, an employee, an FTE, does 20 different things in a day. So automating, one small job helps, creates capacity, but does not necessarily enable the same level of scalability unless you build more complex agents that can actually handle multiple inputs and really start to be a full persona, whether it's a research analyst or a recon analyst, or we can go down, the list. That's the pivot we're going through now. It's about prioritization. And to Alan's point, one way you're using AI is to accelerate the development of UI, UX, but then there's an argument to be said that in a few years, the way we interact with software may be completely different. Yeah. So you want to choose platforms that have, the APIs and the connectivity and they're, agent friendly, if you may, because you may be only interacting with, generative AI interfaces in the future to interact with underlying engines and platforms that have kind of the core capabilities and organization. So, it's a pivotal moment and a potential seismic shift in terms of how we will see a lot of the solutions that support investment professionals evolve in the coming years.
Going beyond aspiration, but to execution. I was just going to ask, just on a more practical level, is there a way that AI has kind of made a difference in your day-to-day? Is there kind of a particular way that it's kind of made something quicker, or just kind of on a practical kind of day-to-day?
Well, from our side of it, it's, as Roland said, it's like persona-based agents.
Yeah.
So effectively now we're designing internal use cases about research agent. You want to find information out. You have your own research agent to go either internally or externally. So finding data just in the entire company is available to you. And that's how it's like, if you think literally just basic mathematical terms, if one person has an agent, you double your workforce instantaneously in one moment, which is an insane change to how companies evolve. And that's how we're trying to use it internally as well, from software development, lifecycle scaling, platform scaling, all of those things around these agents. I use it doing, because of course over the years you create lots of documents, research things, outreach, but now all of that can be summarized. Like, give me a summary of this question. And they can summarize all the things you've written before. So instantly, if somebody asks a question, I can get it to them. And in some respects, I don't even have to answer it now. They can question the same AI engines and get the same research. So I can be busy somewhere else. So it really is huge in terms of value add.
Yeah, I would echo that. I mean, look, we're making massive investments in bringing agents to life to support our business, whether it's internal operations, or actually execution of client engagements, particularly on large implementations. We have tremendous amount of knowledge bases and specific industry know-how that we can put at the fingertips of our team members that historically required weeks and months of learnings to basically make sure we share that information. And still, that was sometimes you miss things and not everybody at the same level. With the right tools sitting on top of a content repository that has hundreds of implementations as a backbone, we can unlock a ton of value and consistency for our clients. We're also rolling out delivery methods that have AI embedded into all phases of I'm going to call it SDLC for lack of a better term. I'm a technologist by trade, but essentially full program lifecycle in terms of execution to accelerate client delivery. So very exciting times ahead.
Absolutely. I mean, I think we could probably talk about kind of AI and that possibilities all day. So I'm going to shift gear. I'm going to make the executive decision. We're going to move on. Otherwise, we will be just start here going, and then we'll get to kind of ChatGPT version of what should I make for my dinner with what's in my fridge. So I think a big trend, and well, two major trends that we've kind of seen in the data kind of come around the form of market requirements, T+1, private markets. What we're finding is that T+1 settlement requirements in private market allocations have jumped from 27% to 51% as a priority. So quite a big shift there. I guess I want to ask you both, while I've got you, how do infrastructure challenges impact firms' ability to address these challenges?
Yeah, I'm happy to jump in since
Yeah.
Alan keeps going first. So, trying to
Go
get
for it,
going.
Roland, you go.
honestly.
You
I'm
go
trying
now.
to step back. I'm trying to step back.
Well, look, I'm going to address private markets first because I actually
Yeah.
think that trend applies across all segments within the industry. And, I kind of think of it in three buckets, asset owners, asset managers, and asset servicers. And I think private markets, a few years ago, it was like an option. You debated whether you did, you allocated more to private markets or not, or how much. Now it's actually paramount. It is probably the most common place for our clients to seek alpha. It's also, for the asset managers, it's now desired by a broad range of investors. So it is no longer an option. And that's why you're seeing, we've seen clients basically try to build it, try to acquire it. And the latest trend is basically, how do I partner? So how does an ecosystem of a traditional asset manager, a wealth manager, a private markets manager really bring products to market? And that will create quite a bit of strain on the technology ecosystem that supports these clients, because you need seamless exchange of information, where legacy technology, legacy infrastructure would be a struggle to scale those models. You can do it for a couple of funds, for a couple of products, and handle it manually and kind of mask the problems. But if you try to scale it, the existing infrastructure would likely fracture. So that's also accelerating the need for transformation kind of across the board. And then, of course, asset servicers need to figure out how to service these products, because, most of our clients have outsourced middle and back office, or they have service providers. So the question becomes, what is the implication to the servicing model? It's no longer, one team did mutual funds and, or fixed income equity, etc. It's now you really need to deal with multi-asset solutions that bridge publics and privates, and strike a daily NAV for basically illiquid or semi-illiquid, let's call it, products. So I think that shift will be massive. It's the reason why everybody is talking about tokenization again, because it could actually be a potential way to solve some of these challenges and try to kind of bridge, the gap between traded versus non-traded assets. So private markets, I think, is a massive shift. And then, on T+1, same thing. I think you'll see that more on the asset servicers and the custodian banks. But again, legacy infrastructure, mainframe systems, batch-centric jobs, and you move to T+1 or even to T, which you should be able to do in this day and age with today's technology innovation, puts a lot of strain on a lot of systems that are 20, 30, 40 years old. And we're seeing more need for modernization and replacement of those systems than ever because of that. And that's an opportunity to, hopefully leapfrog and skip a step to enable, all of our clients to be successful.
Yeah, for us, echo everything that's just been said, but it kind of goes also back to the first question about that kind of strategic pivot, operational efficiency. We took the approach of building private markets natively directly into the same data stack. So fundamentally bringing it all together. So you've got public and private in the same place on the same real-time data approach, which means you can then pivot. If you've got excess capital sitting in your private markets, you can put it to the public markets to add alpha while you're sitting waiting for calls, waiting for all that cash flow movements to happen, things like that, bringing it all together. And then if you think about that, reduces the operational risk because it's one platform. You've got line of sight of anything's happening in the market. Given geopolitical changes, things like that, quickly, you want all the data in one place. And then one of the clients I've been talking to recently, their point was it's the fact we have all that data in one place, which makes it interesting even from an AI standpoint, because it's about bringing the whole thing together. It's that kind of, you want a consistent, accurate, great view of data to make AI powerful. And if you could bring it all together, get the answers all in one place, that takes you leaps and bounds forward. They said they could probably do it, but it would be painful and a nightmare to string disparate systems together. It's actually very hard. Data's in all these different things. So I think, yeah, private markets, huge growth driving away, but bringing it all together reduces operational risk, improves efficiency, allows efficient use of capital, takes it forward. So yeah, it's been a huge, driver on our side of it as well in terms of seeing those things. He says in the asset owner space as well, they've moved into like that idea of what they call total portfolio approach. It's that ability top down from decision all the way through the workflow. So at that point, you really do have to start bringing things together because you can't do it otherwise. It's impossible to make decisions and have them flow into disparate tools. So it's been a massive piece. T+1 is just, happened on one side of the world, going to continue as we drive towards efficiency, driving towards bringing those things together. So, yeah, again, these things are just additional drivers to that whole point.
Absolutely. And I guess before we jump into front office there, you mentioned data, so we could probably just have a nice chat about that now, like, while we've kind of got some time, about kind of the survey findings kind of really come to that you have to consolidate to innovate. And we've kind of got 3 execution strategies that are dominating. So 58 consolidating vendors, 54 modernizing infrastructure, and 50% partnering with managed services. Why do you think this is then consolidation the top priority for the year? Do you think that makes sense with what you guys have been speaking about? I'll go Roland again first so that we can even it out for you both.
Yeah.
You both get equal choices to go first.
So I have, an interesting, a perspective on this because I've seen the movie, right? I remember my early days consulting asset managers where having a best of breed system approach was actually the desired target state. If you go back 15, 20 years, it was like, well, you wanted different tech stacks that specialized in asset classes. And the irony of that is, that basically got us to where we are. And the reason you're seeing consolidation be a big driver is because most firms struggle to solve the data problem, right? So if you have multiple, if you imagine a world where I have multiple systems that are specialized and actually have a really good data layer that harmonizes the information and has, consistency of information, can serve that up to investment professionals to make decisions, you don't necessarily need to consolidate. The reality we face is that most firms basically struggle to solve the data problem when you have a fragmented application landscape. And therefore, consolidation to an integrated front to back platform is kind of akin, as hard as that is, it's not easy, but it is almost a version of the easy button versus solving the data. Because what's happening to clients is, you get a couple of smart people in the room that know this space, they'll think that solving the data issue is easy. The problem is there's only like 5 to 10 people in an organization that actually understand it. So then when you go to execute, a lot of those data programs dragged for years and never actually finished because of the nuanced implementations of the underlying applications and the overloading of, data elements and so on. So going to a single platform, or at least a largely single platform that has a consistent data model, consistent definition of information, essentially kind of solves most of the data challenges you would face. And that's why everybody basically has been on that pathway and continues to be heading in that direction.
The desire to have the best tool for the best job, great. The cost of stringing it together, trying to get it to work across everything else, it always turned out to be far more expensive than anybody thought, and the effects have been minimal. And then you look at it now as we move into a much more data-centric style of world with AI and those kind of tools. Actually, the data platform becomes key. I always make the comment to when I'm talking sometimes in the front office to people, go, every decision is made on data, the data that's put in front of them. So fundamentally, you want the most accurate, the most up-to-date, the most consistent, the data you can rely on. If there's any chink in that, then it's over. If you can't rely on what you see, or there's some question in your mind, that slows you down or causes problems. So you want that end-to-end concept. The data has to be brilliant, perfect in every way, to make a decision, to go quickly, to be able to innovate and create new products, because you need to have the visibility of that data to do that. So I think there's that sudden thing where people have just realized that it said that is the most complex problem to solve when it's all over the place. We used to joke about the spaghetti things of system architectures and things like that. I've seen a reasonably large firm even recently where it's like an A0 bit of paper, and I've never seen so many lines in my life of data moving around all over the place. And it's impossible to innovate in that world because one change over here is like the ripple of moving that through is just too large. So yeah, people I've seen that, as I said, the client said the fact that we have everything together was the light bulb moment for him. That you have everything from like ideation all the way through to end client reporting in one place. So you know where all the data is. He said that was the light bulb moment.
Yeah. Alan, if you think about this, like 3 or 4 years ago, before AI became the hottest topic, people did this for operational efficiency and, streamlining and so on. But if a firm has not made that shift, now with AI, it's even more paramount.
Yeah.
There's no way you're getting value out of AI in a fragmented landscape without really good data posture and even content posture more broadly. So I think if anybody has not been on that journey, they will be on that journey very quickly.
Yeah, well, they say if you run with an AI journey, you end up with a data journey if you didn't start there.
That's right.
You just do.
So, I mean, if the kind of proofs there that we kind of, whenever we do the survey, it seems to be the biggest problem. I think this year it's 63%, so like 2/3 are lacking unified real-time data across their kind of middle, front, and back office. So challenges are still there. Why do you think this is so pervasive, and kind of what are the implications? How do people solve that? I know that's a big question, but one that kind of clearly impacting a lot of people.
For me, it's as you think about the evolution of investment management, as we say, it was, okay, we did equities, bonds, then it's derivatives, then it's complex derivatives, then it's moved into private. There's always new things on the horizon. And SimCorp did the discipline thing of doing the private markets directly in the platform, which most people went acquisition or partner, but that fragments your data model. You have to be quite disciplined of that. It's and focused on what does it mean to have that real-time view across the board of all those assets. I think that was one of the big reasons you see a proliferation of things and problems.
Roland, have you got?
Yeah, I mean, it's the same thing as, every organization has its own unique circumstances, growing through acquisitions, adding new strategies and asset classes, and everybody wants time to market. So historically, people focused on how quickly can I launch a new thing. Sooner or later, you basically have to fix that landscape. And as we see more and more convergence, and multi-asset products, which now range across the board, or you think about everything can be an ETF, or hyper personalization, direct indexing type solutions, you can no longer afford to bring that data and stitch it together in a manual way. So it worked for a while. It enabled some degree of growth, and I think we're getting to a point where the world is moving so much faster, and the product innovation is moving so much faster that you have to innovate from a technology and data perspective to be able to keep up. It's just simply not possible otherwise.
Absolutely. So if I turn my kind of view towards the front office, then I guess I want to ask you both kind of about where the current state of play is, what in terms of tools that you're using, workflow, just to kind of set a field there for how things are in the front office.
The notion of waiting till the next morning to have a view of information is over. People want real-time information. They want to be able to look at their entire portfolio in one place. They want integrated risk analytics. They want modeling tools to support direct indexing, hyper personalization, etc. They want to do SMAs at scale. So a lot of that requires basically real-time data availability and integration. So the notion of old days of doing IBOR that's available for start of day cash, I think, are behind us. And then there's a big pressure on understanding liquidity and cash management more than ever, because especially with you mentioned total portfolio view. When I think about an asset owner that's allocating across publics and privates, you really need to kind of manage cash holistically and have the ability to forecast liquidity much more effectively than clients have historically done it. So all of those pieces essentially come together, and front office needs real-time analytics to look at risk, liquidity, and portfolio modeling almost in real time. Furthermore, it's actually also important to expose that to clients, because a lot of end investors are demanding more transparency into the investment process than ever before, and that's changing the interaction with the investor. But you can't transform interaction with the investor unless you have the underlying data and modeling capabilities to give them a window into the investment methodology and process. Alan?
Yeah, well, I agree. It's the time is shortening, or it's shortening the instant response mechanism, that ability to find information at the moment. The windows have been shrinking all the time, and then people's time to respond to it shortens. So you need 100% real-time data. You need it to be consistent and accurate, and then you need to have the capabilities to be able to get to market very quickly. either through various techniques, and as you say, now because of things like AI, you can chat with it going, what is my highest risks? What are my highest exposure? Even to the point now we're chatting with like risk tools to say, do me a scenario analysis based on these scenarios, and just ask it rather than have to be a technician that goes into various setups. You can ask now. So the response time to get information is huge in terms of getting it to the person, getting into the market, getting it beyond that. And then this is even before we get into the really intelligent agent stuff where it's responding in time to you before you even think about it. It knows you're looking at something and is then giving you responses based on what it believes your next step could be, based on your behaviors and based on the news that's around. So yeah, these things are all moving exceptionally quickly. It's like you have conversations, analytics, future-looking analytics. You've got abilities to talk to other platforms now. So we talked to one of the EMS vendors about liquidity, going, well, they said just ask your agent or our agent, ask the question. So rather than hopping systems or moving data, you can ask now and get the notification to people. So yeah, I think the front office is getting revolutionized very quickly in all of the ways they currently work today.
Yeah, absolutely. I won't ask you guys to kind of go in front of a crystal ball and predict the future, but if you were to kind of if you were to kind of put a guess out there about where you see firms going with their front office capabilities, what would you kind of predict the best in class looks like? I know the hard
Wow, that's a
questions.
big
I know.
question. Well, I'm going to throw that one out
I
there.
asked the tough questions here. This is yeah,
I,
this is the
I,
InvestOps
yeah,
podcast.
I mean, I think Alan kind of started to give you a
Yeah,
window of
he
that.
did.
I would expect, a real-time integrated access to trusted data and information at the fingertips of investment professionals, where the analysis is enabled through an agentic ecosystem that allows for an interactive engagement model between the investment professionals and the technology and the data that could quickly, speed decision making and respond to market conditions and so on. So, I think a lot of Alan's components would be part of that future. But you could expect that it's less fingers on keyboard and in front of multiple screens like you see today, to a much more, agent-driven enablement ecosystem. I do still think that's important to note that a human in the loop and a decision maker will continue to be critical. So human plus AI being kind of the future, because I do think there is an element of human intelligence that I don't think you could, at least at the moment, replicate. And not nor potentially trust, right? So trust is another important element, because even if you can replicate the intelligence, there's going to be a lot of skepticism. In fact, that is probably the biggest roadblock to innovation nowadays. The technology is moving so fast. How do you handle the change management and the human adoption of that technology? Because we know, investment professionals are some of the smartest people out there, but they love their Excel models, and the reason they love them is they control them, right? They know what they do. So getting them to accept, effectively, technology requires a window of transparency and a trust building, so that you actually increase the adoption of these
I
tools.
know they've just opened up a chat room for agents talk to agents and bots to talk to bots, but so far we haven't found a way to send them to jail. So until that point, I don't think we'll be allowing them to go to actually doing direct investments. We've like seen just even in the recent near term things like you can see it quite an easy future where you're working away, you get a pop up to say cash has landed from our into your investment. These are the 3 or 4 things you've done recently. Do you want to go straight re-optimize the portfolio, call in the data in real time, do the risk analysis, be presented with the various options of what those results are, and a fund manager going, yep, great, go. And effectively all they've done is say, seen a pop-up, get a review, and said go. That could literally be the workflow in a short space of time based on the agentic stuff we're seeing now, because the data can be moved from, as we said, in terms of liquidity finding all the way over to the models that drive the investments and things like that. I did have a chat on one of the panels, and they said there is a fund that's already come out which is completely AI. I'm not sure we're 100% ready for that yet. To your point, Roland, I think people still be quite nervous about the idea of that just running away with itself. But yeah, we've seen, as I said, screens. You won't be looking at screens the way you did before. You can break them down, build them, trash them, build them, as and when in terms of what's going on in the world, how you want to see the data presented instantly. You can, ask questions from different places. You can talk. I'm still concerned about the idea of everybody talking to the agents or, your chat GPT principle, because if there's 50 people in the room and everybody's shouting at a computer, how noisy and how messy could that get? But it's all kind of happening at a rate of knots, but at the same time, it's still going to be governance. There's still got to be that control. And yeah, I think people are well melded into this world for a long time to come yet, because at the end of the day, yes, there's things which you can see from data, but there's also that inherent thing that's human about it, the decision about is it a binary question, or is there more behind it that I know, that I've heard before, that I've memoried as part of this, and those kind of things. So I think we're still in the loop for some time yet.
Well, AI couldn't be having a great conversation like this, so
No.
like that's one thing. This
Yeah.
isn't going anywhere. Podcasting's here to stay.
Yeah.
You guys, this might be hard to narrow down because you've touched on kind of ways to kind of bridge that gap. But in terms of the execution path, if you could give one piece of advice, say, for a firm that's kind of feeling a bit stuck, what would that be? What would that look like?
In terms of actually executing on transformation programs.
Yeah.
What I tell clients all the time is, look, the work can get done. What usually holds the work back is the degree or lack thereof of senior leadership involvement to make decisions quickly. So if you think about programs that tend to slip or go, behind schedule, it's usually because of analysis paralysis and, to a large degree, an attachment to current state and legacy processes. And the best way we've found to solve that is making sure the right leaders are involved so they can make decisions in hours and days, not in weeks and months, right? And if you leave it to, kind of the teams on the ground, they will always tend to gravitate towards more analysis and making sure they're 100% certain versus making a decision, quickly and, make a decision quickly and fail fast is far better than taking a longer time to try and be perfect, which usually causes more challenges. So that to me is the most important factor of success, is that senior sponsorship and active involvement, not just showing up to steering committees and status updates.
Absolutely. Alan, if you could do, say, one piece.
For me, we had a conversation with a client recently where they wanted to do the fix the point problem. But once we started having the proper bigger discussion then about, like some of the conversations we've been having about data and things like that, it was that they then realized they had to widen the scope. Another point solution in their stack would get them to a point where they need to go in the future, but it's not future-proofing them in any way. It's just kicking a can of a problem down the road. Sometimes it is getting the senior leaders around the table and going, you need to transform. Because if you don't, you get left behind. At this point, you will get left behind. That transformation is go with it, go for the transformation properly to get yourself ready for the next stage, because things are moving so quickly at the moment. I think that those days of, just do this for now because it'll tide us over are long gone. You can't do that now because people just accelerate away from you.
Absolutely. And I guess for me, I mean, I work on our InvestOps report every year, kind of see it change and see the stats kind of move every year. And it's just nice to kind of pull that story apart and chat about it more in detail with you both there. I wanted to give you a chance before we wrap up as well to kind of share a bit of a key message from Deloitte and from SimCorp there that people can kind of take in how you're navigating innovation.
After you.
So polite. I like it. We'll go. Alan, we'll start with you.
Okay. I think, as you say, a lot of what we talked about starts with that foundational data layer. It's like, get it right. Focus on what that means, because that unlocks a lot of the other pieces. That really does. We've seen it with clients who just bring in everything to get one consistent view of data that allows them then to springboard forward. You've got your privates, your public markets, the ability to have everything in one place. And then all of that rich data, all of that accessibility of our APIs and those ecosystems then enables all of this innovation and new technology. That allows you to go in different directions because you're ready for it, because you've got the base is solid, your foundations are there, and then you can leverage up and then you can move forward. I think for us, that's been the key one.
Yeah, I mean, I would, summarize it into, the time to act is now. Transforming the way you do business is no longer an option. It is a necessity. So be brave. Technology can do far more than you think. And those that take advantage of it will leapfrog others. And our research shows that firms that invest more or allocate more of their spending to technology are winning more and capturing more assets in the marketplace, generating outsized returns, having better margins. So inaction is no longer an option. Waiting on the sidelines is no longer an option.
Well, I want to thank you both. Thank you, Alan. Thank you, Roland, for taking the time to join me today and for this really great discussion. And if anyone wants to kind of find out more about the stats that we've spoke about today, they're in our InvestOps 2026 report. So you'll find those in the show notes. But thank you very much, both of you, for your time. And thank you, anyone who's listening. Thanks so much.